Welcome to Trading Lounge. I'm the US Indices for the 6th of January and starting with the S&P here on the monthly chart. So we're looking here for the A wave, the B wave and the C wave here coming back into the GFC here and the tech boom over here. And then we're looking for 5 waves to the upside here in terms of wave 1 and 2 here, and wave 3 and 4 here, and wave 5 here. So we can lift these a little bit higher here. So we're looking for 5 waves to the upside here. To finish this off here, so that's sort of where we are here. If we drag that into the weekly chart and pick it up from this wave 4 here, we're looking at it like this here. So we still have a long way to go with all of this here, and onto the daily chart here. So with the daily chart here, we're looking at 2 scenarios here that we talked about last time, and one of them is that we have this wave 4 to wave 5 here. We have that top in play here, or we have one more little move to the upside to finish this off in this space here. At this stage, either stage really, once wave 3 is in, we'll look at this and we'll come up with strategies for this, but once this is completed here, then we'll be looking for a corrective move back for wave 4 to pull back to the wave 4 of 1 lesser degree, or the 38.2% retracement level, which is a little bit higher here. So that's what we'd be looking at in that particular space there. There is a pressure applied to this top here now that we're seeing insecurity in the world, and we're seeing that's reflecting back into gold here as a positive indicator. As you may know, we've been looking at gold in terms of wave 1 and 2 on the daily chart, wave 3 here, wave 4 moving across the medium level here, and then we'll see wave 5 push up to 1600, 1650, maybe a bit further. We'll just track the structure. Commodities can tend to have extensions in wave 5 as well, so we'll need to be mindful of that. But this certainly has further to move to the upside here for this. So this will apply pressure back into this area here. But also stocks need to move up higher as well. If we look at this is not a very clear chart, unfortunately. I just did this on the other computer, but this is Morgan's JPM here from 2008 low here, which is a wave 4. We're looking for this move to the upside here in terms of wave 1 and 2 here, and then 1 and 2 and 3 and 4, and going up into 5 here. So just wanted to pick it up in wave 4 here on the next chart here. So this is picking it up here. So in this case here, we've still got 1 and 2 and 3 and 4 and 5 here for 1 and 2 here. And from wave 2 here, we're moving up into wave 3, 4 and 5 here for wave 3. So I'm just pointing this out, that, I mean, and different stocks are doing different things, of course, but these markets are moving. There's still plenty of trend to the upside there, but that wave 3 would coincide with this wave 3 here. So let's just move into this space here and have a look at that now. So as we talked about this last time, we had these 2 options here, and this was one of them here, where we have wave 3 here, wave 4 here. So wave 5 is finished off nicely. We can look at that as wave 3 here, and then in wave 4 that would pull back to 38.2% retracement level, where it has already. This so we'll just talk about this in a bit more in detail on the tick chart, 1 hour chart, just pointing out the count. So this one here can have wave 4s can get a bit complicated, so it might be just that simple, but we maybe have an A wave, a B wave, and a C wave here, and then wave 5 to the upside to get to that wave 5 of 3 here, and then that ABC correction for wave 4 to pull back into this space here. We'll just have to see how that pans out there. We need some tactics for all of that, but that's where this has already pulled back into its rightful space here, but it's possible that we'll get a move here first, an A and a B and a C here, and then up to that side. Or the other count, which we'll look at now, is that this is wave 5 here and being completed. So on the hourly chart here, this one here being completed. Sorry, I haven't updated this, but we're looking for that last push higher here last time, so that can be there. But just to be mindful too that this wave 3 can be here and wave 4 can be here. So a little bit of a tricky spot here at the moment. So, but let's go in and have a look at this here. One thing that we can also look towards too is the trading levels. So we've got 3,000 here, then we've got what we call group 1, which is 100, 200 and 300. And these numbers play out and it can be very helpful. So in a bull market, we know that if we get a nice tested support on the 300 here, then that will push it up to 500. So what this number 3 does here, it really separates the market from being pulled back to the closest largest number here. So getting support on this, on number 3 here on the top of group 1, it will sever the order flow from market being pulled back into this 3,000 here. Now the other point here is that once a market's been trading above the 3,200, the number 2 here, 1, 2 and 3, if this number here 2 becomes the resistance, then the market will be pulled back down to this number here. So that's something that we can look at. We also know too that the 38.2% retracement level is already in here. So if this here becomes, let's just say for a moment, if it comes down here, it's going to bounce off here, but that can still just be wave 4 here, so we need to be mindful of that. But what we are looking for here, if the market moves down here and then there will be some sort of bounce here, retesting back into supply. If the market moves through here, no need to chase that here because it will retest here. And if that retest fails, then that's resistance at that point, and then we'll see the market move lower. So the short trade would be really in at this point here. So we could just about draw that in here. So let's just grab one of these here. I mean, it's just good to know these numbers and how they work a little bit. So we should be able to get a better situation this, but I'm just saying that, you know, because when a market moves through here, it can come back up here and then just, you know, sit and work back up here, you know, just taking out stops and things. So it really needs that retest, and that retest needs to fail there. If you've got access to volume, then the volume down here will be increasing volume in the trend and then diminishing volume in the retest here. So you may be able to get a better position in here because that move back here will be in 3 waves here as an A and a B and a C wave here. So you can draw a line through there and short through that way if that volume is lower than that one there. You can look at how to read volume on our site, and that will be helpful for you there. So we've really just got to work through this scenario here. One of the other points here too, though, is that if I copy that, we can go long above this one here as well, because that is at the 61.8% mark roughly. We can check that out. So we can go long here, or we can go short down through here. We can also go short a bit high here as well. So if we just copy that here again, if you wanted to go short, because we're using this number 2 here of minor group, this is minor group 1, 100, 200 and 300 of minor degree. The next degree down is sub-level. So this is 3, 2 here. So we've got 1, 2 and 3 here. So the same rule can apply here as well. So if that becomes the retested resistance, so over here when it never became the resistance, and it just poked down but never became the resistance. So you could have had a short trade under here and under here. Under here it came down here and retested back up and came back down and then moved back up. So that would have been your low point to short under here. So you're waiting for that particular low there. If you do that, you're going to be in safety more often than not. But let's go in and check this out here on the tick chart here. So let me just bring in a little bit more data here. So we're only interested in this here. So let's just stay with that, try and fit that in. So first of all, the move down through here, it can count as 5 waves here in terms of extension in the first wave here, and then wave 2, and then wave 1 and 2 and 3 and 4 and 5 here for the third wave, and the fourth wave and the fifth wave here. So it's making the third wave not the shortest, the fifth wave is still the shortest. So that fits as a nice move down through here as I'm just calling it wave A, but it also could be wave 1 here as well. So just be mindful of that, a larger picture to the downside. And the same with this one here as well. That can be wave 2 here as well. So the move up through here is also interesting as well. So if we just go into that a little bit. So there's 5 waves in this first little leg here for 1 and 2, then 1 and 2 here, and 3 and 4 and 5 here, third wave, ABC for the fourth, and then up for the fifth wave here. So we've got 5 waves here, then we've got an A and a B and a C here for the B wave, and then we can look at 5 waves being in here for the C wave. So really that counts as a corrective wave to the upside with wave B or wave 2 there. And as I mentioned, that we can go long above this high here because at this stage it can count the way that I've counted it. But if we get a move up through here, then obviously it's going to be a different count. But to this point here and to the box here, the 61.8%, that's an ABC correction. It could also be an A and a B and a C wave coming into this space here and moving up from there, and that's why we're going to go long above that high here. So the Elliott wave's important, but also trade setups are important as well, because if that's breached, that takes it past being a corrective pattern, and we would look for this to be something else at that point. Now the other point here too is that this move down through is going to find a lot of support at this 3,220 here, because it's the 50-60% retracement level here. So I mentioned before that if the 2 here, this is subgroup 1 here from minor level 2 here, 1, 2 and 3. So if the 2 here becomes the resistance here, it's good at this stage because it's also it's very close to the 61.8% retracement level here. So if that becomes the resistance here, then we can obviously look to short at that particular point here. How far will it get us? It might just be an A wave, a B wave and a C wave here. So it may not get you very far, but at least you will be able to minimize your risk. If you, I don't know what your risk is, if it's 1% or 0.5% or 0.25%, but whatever it is, you'll be able to halve that, if not get it to break even at that particular point on the downside here. But there will be, don't panic, there will be a lot of support here, and it can come back up and retest the number 2 again, where the supply will be for the 61.8% retracement level. So you'll need to keep your stop, above that, but you should be able to reduce that. Even taking part profit here, 50% profit or 60-70% profit here, and then look to move back in again over here if you see weakness come into play there. I think that that's sort of covered it. There's not much to report with the Nasdaq as well because it's in the same boat as well. I mean, this is where I got the count from for the other count for the S&P here, actually. So let's just play this out here. Yeah, this is where I got this sort of other count for the S&P. Which can come back to that level here. So we could say that, in fact, the most important level here is the 8650. 600 is important, 700 is important, but you'll see tops and bottoms at 600 and 700, but the 650 is where you'll see the balance of a correction play out from that point. It's the halfway mark between two levels. So we've got the Fibonacci numbers 1, 2, and 3, and 5 and 8. Okay, and the 650 here will be the most important one here. So 650 here as the resistance here would set up the short trade on that side. Okay, so I'm just going to remove that there. So we'll do the same thing here. Just in case that is the top here, it will be like this here. But otherwise we'll see this move down and then move up from that point. So that will be the line in the sand, 8650 here for this. Alrighty, I think that kind of covers it to a point. Not great trade setups and everything. You know, a trend has a beginning, a middle, and end, and we're kind of at the 2/3 of the way through it here at this stage. But anyway, another session or so, we'll be able to work out where we are, and we'll probably be able to get better positions. I'll be there to help. Alrighty, thanks for tuning in. Cheers.